Is the real estate market about to crash in 2026? Interest rates are high, homes are sitting longer, the headlines are super loud, telling everybody to predict a crash. But today I want to talk with you about what's actually happening in the South Sound market with real numbers, and more importantly, how buyers and sellers can win in 2026 instead of panicking. And this isn't about hype. This is about what's actually happening in the Pacific Northwest market, focusing on the South Sound for 2026. So let's start with the biggest factor that everyone feels: interest rates. As we head into 2026, the average 30-year fixed mortgage is hovering around 6.1 to 6.4%, depending on your credit, your down payment, and your loan structure. So for context, in 2021, rates were under 3%. And then in late 2023 and early 2024, they peaked around 7.5%. Now, today they've come down from that 7.5 number, but they're still well above what people emotionally got used to. That shift alone changes affordability by hundreds of dollars a month for buyers, and it's the primary reason that demand cooled down. But here's the key point. These rates are not historically extreme. They're just extreme compared to a very unusual period of cheap money, and that was 2020, 2021, and maybe a little bit of 2022. So let's talk local. In much of the South Sound, Tacoma, Pierce County, Thurston County, and surrounding areas, median home prices are hovering around $470,000 to $490,000 depending on the neighborhood. And prices are mostly flat to slightly down year over year, but they're not collapsing. The days on market are a little bit longer, meaning that buyers have some time again. And by a little bit longer days on market, I mean they're between like 30 and 45 days on market. Inventory has increased modestly, but we're still nowhere near oversupply. And this is really important. We don't have the conditions that caused the 2008 crash. There's no mass overbuilding, there's no toxic loan products, and there's no wave of forced selling. What we do have right now is a market reset. But a lot of people get really confused about the real estate market and they say, oh no, another 2008 crash is coming. And that's not what we're seeing here. Here's what I predict is going to happen in the 2026 real estate market. I think we're going to see some low single-digit appreciation at best. Most properties are most likely going to appreciate between 3 and 8%. 8% at the highest, in my opinion. I think some neighborhoods are going to be pretty flat at that 3% mark. I think that well-priced homes are still going to be selling, and I think they're going to sell fairly quickly, under 30 days. Overpriced homes, they're going to sit on the market, and we're going to see a lot of price reductions on those properties. There's no longer a momentum real estate market in this area. It's really a strategy market, and that changes how buyers and sellers need to behave. So if you're a buyer, this is quietly one of the best environments that we've had in years if you approach it the right way. A strategy that I have for you is focused on your cost, not the interest rate. I think this is where most buyers get it wrong. You don't live in the purchase price. You don't live in the interest rate. You live in your monthly payment. So instead of obsessing over whether the rate is 6.1% or 5.7%, buyers in 2026 need to be focused on three things, in my opinion: their down payment, their cash to close, and the monthly payment over a long period of time. The real question is not what interest rate am I getting? It's, can I comfortably afford this home every month for years without stress? That's what actually determines whether a purchase is smart. Smart buyers in 2026 will be building budgets around real monthly comfort. They're going to use seller credits and price reductions or buy downs to control that monthly payment. These smart buyers are going to be planning for long-term affordability, not short-term rate perfection. Rates can change. Payments are really what shape your day-to-day life. Another strategy that I have for buyers for 2026 is to use time as leverage. In 2021, buyers had hours to decide. If a house came on the market at 10 a.m., that house had multiple offers by 2 o'clock in the afternoon. In 2026, you often have days or even weeks to make a decision. So that means you can do proper inspections, you can do real negotiations, and you have the ability to walk away if the deal doesn't make sense. This is a disciplined buyer's market, not a desperate one. Third strategy that I have for buyers is to target stale listings. So some of the best opportunities are homes that have been on the market for at least 30 days. Maybe they were initially overpriced or they've already had a price reduction. So those sellers are no longer chasing peak pricing, they're chasing certainty. And that's where leverage lives. These buyers are now going to have the opportunity to make a real deal with these sellers who have had their home on the market for a long time. So if you're a seller, I think that this part of the video really matters a lot. I have some strategies for you too. My first strategy for you is to price your home correctly from day one. This market is no longer forgiving optimism. The first 10 to 14 days on market matter more now than really ever before. So overpricing is going to lead to longer days on market. It's going to lead to price reductions, and it's going to lead to weaker negotiating positions. Homes that sell for the most money in 2026 are priced correctly from the start. They're not listing high with hope. Another strategy that I have for you is that condition is not negotiable. You have to remember that buyers have options again. So that means that deferred maintenance is actually going to get punished. You need to paint your house. You need to make sure that there's no leaks and no major things that are going to come up in an inspection. Poor presentation is going to cost real money. So making sure that your home is decluttered, making sure that maybe your home is staged or that the furniture is positioned properly to show the real amount of space that your home has. That's going to be massively important in 2026. And then a third strategy that I have for sellers is to remember that flexibility is power. Winning sellers in 2026 are going to be flexible. So what that might look like is offering closing costs or helping buy down a buyer's payment. So what that might look like is offering closing credits or maybe helping buy down a buyer's payment. Also having the flexibility to adjust some timelines. Maybe closing gets pushed. Maybe you have to adjust your timeline when it comes to moving out or rent back situations. There's a lot of different things that may need to happen to be flexible as a seller. Also, just being reasonable after inspections. Most likely buyers are going to be asking for some kind of repairs or some kind of credits after their inspections, and it's something to just kind of expect as a seller in 2026, at least for the most part. Sellers who adapt will be the ones that win. Is the South Sound real estate market crashing in 2026? The answer, in my opinion, is no. But the easy money, no thinking required era is over. This market rewards preparation over panic. It rewards monthly affordability over headlines, and it rewards strategy over speculation. So if you're buying, selling, or investing in the South Sound and want to navigate this market the right way, drop a comment or reach out to me directly, because the next 12 to 24 months will quietly create opportunities for people who understand how this game is actually played.